What happened today to the stock of Paychex, the payroll processor and human capital management company that caters to small and medium-sized businesses? After reporting what to me seemed like a real solid set of numbers this morning, the stock plunged 7% early in the trading session, largely because I think some people felt the margins are taking a hit. But as I've told you repeatedly, this stock tends to sell off in response to earnings, even when the numbers are good. Maybe Wall Street got the memo because ultimately Paychex rebounded, finishing the day off nearly 1.4%. It's a little tricky in a declining interest rate environment. There is a payroll processor issue. The company actually makes more money when rates are high, but after employers pre-fund their payrolls, Paychex collects interest on that money for every minute before it's deposited in your bank account. Now, but that used to be a big issue, but the company's gotten well beyond that. It's a lot of other levers that it pulls. So let's take a closer look with John Gibson. He's the president and CEO of Paychex to get a better sense of the quarter. Mr. Gibson, welcome back to Mad Money.
Jim, thanks for having me, and congratulations on the new book released today.
Thank you, John. Thank you. I really appreciate that. We did a nice book signing today in Midtown. Well, I want to cover something that I think people have to realize. You, even though it's still early in your fiscal year, you felt confident enough to raise your full-year outlook. So anyone who thinks that the stock should have gone down at the beginning, I don't know how to jive that. You gave a pretty good outlook here.
Well, Jim, I'm going to have to read your book to understand the markets. I can't figure it out.
Me too.
Yeah. So what I'm telling you, look, we're off to a strong start in our fiscal year. This year, we delivered 17% revenue growth. Not too shabby. We beat earnings per share by 2 cents. We had adjusted operating income growth of 15%. And quite frankly, you mentioned margins. Our adjusted margins, 41%, still industry leading. And really, that performance is reflective of really continued progress on our Paycor integration, the acquisition we completed earlier this year, continued sustained demand for our human capital management, our HR outsourcing solutions. And then, quite frankly, Jim, it's really in a backdrop of what we're seeing is a very resilient and stable small business employment market. And so those three things together gave us confidence. We actually raised our earnings per share guidance to 9 to 11% for the full year. And we reaffirmed our revenue guidance between 16.5% and 18.5%. I think those are solid numbers. And remember, we're early in our year. Our big selling season gets started here in the second quarter and third quarter. So we felt good at this point in time based upon the success we're having at Paycor, based upon what we're seeing in driving operating efficiencies as part of the acquisition and continuing to leverage technology to drive margins, we felt confident we could raise earnings per share for the year.
Well, I'm glad you said that. I mean, when I first saw it, I'm on the desk listening, Carl and David and I are talking, and I said, oh, maybe I didn't say it out loud because I hadn't done the homework, that maybe small business, and maybe he said lowered the boom on small business. And then I was thinking, wow, he speaks to the Federal Reserve. This could be a chain reaction. But then once I read the call, it's very clear that there's, I think, kind of an untold amount of strength in small and medium-sized businesses, given the gloom we keep hearing about.
Yeah, Jim, I tell you, I hate surveys. I hate these surveys that we have. There's a lot of numbers going around. I like to look at the actual raw data. I like to look at credit card receipts, which you can get on a real-time basis. I like to look at accounts payable, accounts receivable data, and I like looking at payroll data. We just reported our jobs report a few hours ago. And the labor market for small businesses continued to have a very slight change to what we've seen all year. It's a stable job growth. Wage inflation continues below 3%, and there's really no signs of recession. We continue to see strong demand for our solutions, which all indicate to me that small businesses are resilient in this economy.
Well, also, I think that in terms of this real world, this non-political real world that you're in, you talk about how with rate cuts and the tax bill renewed business confidence, that confidence is higher than people think.
Yeah, Jim, we talked about it the last time. There was a high degree of uncertainty the last quarter when we talked. And you look today, now with the tax bill passed, remember, just a few months ago, small business owners did not know whether or not those tax rates were going to expire and everyone was going to have a tax increase next year. You're thinking about capital investments. You're not sure what next year is going to bring. There's more certainty there. The R&D tax credits that were passed in that bill. All the other parts of the tax bill that I think are very encouraging for small business owners. Then you add on top of that, we've got the Fed starting to move. And I think that begins to show a sign to small business owners that there may be some relief from an interest rate perspective. And so I think there's more reasons for them to have clarity about what the future holds. We still have a lot of uncertain issues, as you know. But again, those are two things that I think are leaning in the direction of small business owners being more confident to invest in the future.
Well, yeah, I mean, I'm glad you said that because it's also clear that the stories are that they're the ones who are being hurt the worst by tariffs. Again, I didn't get that feeling after listening to your call.
No, Jim, I'm not saying that. Look, there is no question that there are segments of small and large businesses that are being hit by tariffs. And then there are many segments that are being squeezed by tariffs. What I mean by that? Now, this is anecdotal. Meeting with one of a wholesaler of windows and doors, gets their product, some of their product from Canada. Talked to him the other day, and he says, we're splitting the tariff between the Canadian manufacturer and him. They're not passing it on. I asked him, what does that mean have to do with your employment? He says, you know what, John? He says, I'm not hiring as many people as I expected. Okay. I'm still hiring for growth, but I'm not hiring as many as expected. And that's what we're kind of seeing. Jim, for an economy growing at 3.8%, we should be seeing more robust job growth. That doesn't mean we're seeing layoffs, and particularly in small businesses, that's not what we hear from our clients. In fact, from our clients, they're talking to us more about employee training and reskilling and investing in their employees. Those are not signs of employers that are about ready to lay off their employees if they're investing in them.
Not at all. Hey, one last one. It sounds like to me that the integration with Paycor is going terrifically, and that's going to be accelerating growth probably by calendar year next year.
Yeah, Jim, I've been very happy. The integration continues to exceed our expectations. Cost synergy targets that we originally set and then we raised, we've beat. We've actually seen additional opportunities we talked about today, not only for further synergies, but also investments we can make to accelerate growth. We've had some notable retention wins. We've had some large HR outsourcing wins very early on. And so if I begin to think about our HR outsourcing business moving up into 1,000+ size companies, that's a game changer at Paychex. And so we're real excited about the cross-sell opportunities in the Paycor 50,000 clients. We've started that. We're seeing progress. So again, we're seeing early signs of progress. We still got a lot of work to do, but I'm very happy about where we stand right now.
And you don't think that at small business not that concerned about the shutdown worries, right? Because, I mean, they just kind of separate what's going on in Washington with their own profits, and they don't see a lot of overlap.
Yeah, Jim, we've seen the shutdown models before. Again, we'll see how long it lasts. Now, how long it lasts is important. Again, but you're going to have pockets certainly around the D.C. area. If you're owning a restaurant, this is not good news for you. And so again, but you're seeing pockets and segments. You're not going to see, I think, any type of wholesale major issues. Now, if we get into something that's a long term, we'll have to reevaluate. But again, I don't see that as being a big factor at this point in time.
All right, terrific, John. I'm glad that we got the straight dope from you. That's the only way to really understand things. John Gibson, President and CEO of Paychex. Thank you for the kudos in the book, too. I really appreciate it.
Jim, congratulations.
Thank you. Mad Money will be back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.